Starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that.
The fact that India is the Maharaja of tariffs, it's the highest tariffs in the world, charging on American products.
We therefore weren't doing much business with India, but they were doing business with us because we weren't charging them. Foolishly, we weren't charging them.
We are engaged, we remain engaged with the United States, and at this time, I can't say more than that.
Mr. President, this is Chandra Shrikant from India. Can you give us an update on the India-US trade deal?
First of all, I have great respect for your Prime Minister. He's a fantastic man and friend of mine, and we're going to have a good deal.
Since I arrived in India about a month ago, I have said, and I truly mean it, that the two leaders have a great personal relationship. And that is something that carried this deal forward.
This is a good thing that has happened for the country, and the exporters will be happy.
Trade talks had never had any adverse impact on the defense collaboration, which was going on like as usual in any case. Thank you.
The collaboration between Indian defense companies and US companies will increase?
I hope so. We welcome all global OEMs to invest in India.
We are happy that the trade deal has got finalized. It removes uncertainty in this space, and we look forward to the partnering of two of the largest economies and democracies in the world.
After months of tensions and tough talk, the US and India have agreed on a trade deal. Let me explain to you what's happened. The US has agreed to cut tariffs on Indian goods from 50% to 18%. Remember, 50% included that 25% punitive tariff on account of the purchase of Russian crude. Now, in a post on Truth Social, President Trump claimed that India will stop buying Russian oil and buy US goods worth $500 billion, which is pretty much the size of the annual budget of the Indian government. Prime Minister Modi has said the deal will benefit both nations, but he stopped short of confirming many of President Trump's claims, including that on Russian oil and the commitment to buy specific U.S. goods. The U.S. tariffs of India are now at the lowest level compared to other emerging economies, with Indonesia facing a tariff rate of 19%, China 34%. The announcement comes just a week after India and the EU finalized a deal which has become India's 9th trade agreement in the last 4 years. While neither side has confirmed details of the trade deal yet, speaking to Network 18 exclusively, U.S. Ambassador to India Sergio Gore said that part of the agreement is the promise to stop buying Russian oil. Stock markets skyrocketed at opening bell, and the bulls managed to hold on to the gains through the day. The Sensex gained over 2,000 points, and Nifty 600 points higher. All sectoral indices closing with gains more than 12 lakh crore rupees added to the market capitalization of listed companies today. The rupee also rallying against the dollar. The rupee closer to the 92 mark yesterday, and today closer to the 90 mark. The rally on the rupee has been the biggest that we've seen in the last 7 years. Well, to take us through the industry pulse check, joining us now is CII President Rajiv Memani. Also with us on the program, Amit Kalyani, the Vice Chairman and Joint MD of Bharat Forge. Joining us on the show, Sanjay Budhia, the Chairman of the CII National Committee on Exports, also the MD of Patton International, and Subankar Sen, the member of the CII Task Force on Gems and Jewellery. He's also the MD and CEO of Senco Gold and Diamonds. Gentlemen, appreciate you joining us here on the program. Rajiv Memani, first up to you. President Trump doing what President Trump does, keeping all of us up at night, and that element of surprise, 9 months after bickering, after all the tough talk, finally coming to the table and closing a reciprocal tariff framework. And again, I'm explaining this to our viewers. This is not the larger bilateral trade agreement. This is a reciprocal tariff framework that has been agreed on. Your first reaction, Rajiv, on the fact that these two strategic partners are now back on the same dance floor. To quote the Commerce Secretary yesterday, it takes two to tango. At least it looks like they're both now on the same dance floor.
Yeah. No, thanks a lot, Shireen. I think it's a positive development for India. And I would say it's particularly very, very positive for the sectors that were impacted. US is India's largest trading partners, especially in terms of merchandise exports. Almost 20% of our merchandise exports are to the US. Some, not all, but some parts of the exports were impacted because of the tariffs, and those were the labor-intensive sectors. So I think to that extent, I think it's been very positive. The second is in any interactions that you had with global investors, Indian investors, industry amongst each other, with government, with media. I think this used to be, inevitable question: when will the U.S. trade deal be done? I think to that extent, I think this is one sort of uncertainty off, and people had different dates in mind. People had different ramifications in mind. So I think to that extent, there is one uncertainty off. So if you look at the India strong growth story that is there, I think this was one thing that always used to hang, and I think that's off the table. So I think that's positive. And third, what we have seen, thanks to our Prime Minister and Commerce Minister in the last 12 to 18 months, we've done a lot of these trade deals, uh, and a lot of them are in the process of getting finalized. And whenever, as CII, when we have gone and visited these countries, whenever something like this gets done, the quality of relationship between industry, between government to industry, government to government, cross-border investments, cross-border trade, opportunities to look at manufacturing, alternate supply chain routes, they all get positive. So I would say, from a Make in India standpoint, from a supply chain standpoint, particularly for labor-intensive sectors, and as India is looking at more competitive manufacturing setup, I think this is positive. In the overall grand scheme of things, Shireen, if you look at it, this is like, 50 billion, 40 to 50 billion dollars of exports in a $4 trillion economy. It's not doesn't it's not a big number, but I think in terms of messaging, and particularly in terms of the impacted sectors, I think this is big news.
Yes, it certainly is a very positive development. And to your point, it removes that overhang that has been weighing on investor sentiment. Amit Kalyani, let's talk sector specific now. And, our conversation with the Defense Secretary last night on our budget verdict, he made it very clear that while we may have had this tariff tantrum between the two countries, there has been no spillover on the defense relationship, on defense cooperation. What does this now mean in terms of further cementing the defense cooperation between both sides? Also, to President Trump's claims, and I'm saying claims because we haven't heard from the Indian government yet, that this is also going to mean India buying more, including defense, perhaps aircraft, and so on and so forth. How do you see this?
Hi, Shireen. Thanks for having me. I didn't realize it's been 9 months. So, good news comes after 9 months, in a lighter vein. I think if you look at India and the US, our strategic relationship on defense and defense collaboration has gotten much stronger in the last 5 years, especially with the track two between our NSA and their NSA, which started and created a real longer-term approach over defense R&D, defense collaborations, and defense cooperation. So I think with this trade deal having been now inked and clarity on what it means, it's a good thing that we have the building blocks in place to leverage and to really scale up our relationship. Indian companies have tremendous capability in the manufacturing of components, subsystems that go into global defense equipment. Obviously, the US has a lot of the critical technology that goes into the very high-tech stuff, control systems and, the very navigation systems and sensors, etc. So I think between the two of them, if we can leverage them to bring them together, this is a big opportunity going forward. That with notwithstanding, we are seeing generally this whole rearm the world kind of activities, creating tremendous opportunities for the supply chain of defense.
Yeah, no, absolutely. You know, you talked about some of those collaborations, but I want to get you to comment specifically on the Section 232 items, Amit, and whether you believe, and we are still waiting for the fine print, so I'll get you and Sanjay both to comment on that. Do you expect, you know, the 18% rate to apply even for the Section 232 items?
You know, Shireen, I'm not sure personally because Section 232 was a specific, you know, let's say level which was set. And I mean, unless there is some overriding of that, we don't know, or tweaking of that, we don't know. So like you said, the fine print is yet to come out.
Yes, we are still waiting for clarity on that. And of course, it is instructive to point out that this is not in effect as of today because those executive orders are yet to be signed. So this is still an announcement. It has not translated into reality. Sanjay Budia, let me come to you now. You know, on balance, what does this mean really for, you know, the shrimp sector, for the textile sector, for the gems and jewelry sector? How badly were they already impacted? And how quickly do you believe they'll be able to bounce back and recover as this gets operationalized?
Yeah, Serene. So it's a real great win-win situation for everyone. And the sectors, particularly what you mentioned, textile, seam, leather, they are the sectors which are labor intensive, and definitely US being one of our largest markets, they were impacted. So from the morning, there is a huge positive sentiments, and all of them are gearing up their additional capacities, and the capacities what was created. I must comment that, you know, just within a week of signing EU trade agreement, the signing of the agreement with the US really shows our position on the global table. And in fact, our persistence has paid off. Honorable Prime Minister and the Commerce Minister and the team, they have really done from a position of strength. And we are on the high table, and we respect that, you know, there's a long-term relationship between the two strategic partners. It's not only B2B, it is P2P, people to people. We have our friends, relatives, and most of us have somebody in US. So you consider US as your, you know, natural extension. So this was more or less everybody was expecting that this is going to come. Question was when. As Rajiv rightly said, it was in the conversation, you know, morning till evening when the US is coming. It was Diwali, it was New Year, but finally it has come. So we are all waiting for the fine print, and I'm sure that the fine print will be as fine as it is expected.
Well, we certainly hope so. But Suvankar Sen, let me come to you now, specifically as far as the gems and jewelry sector is concerned. You know, one, I want to understand how badly the sector has been hit on account of the tariff imposition, and what do you believe is likely to be the recovery period now?
So Shireen, you know, US has been one of the largest markets for the gem and jewelry exports. Almost 30 to 40% of our exports are to US and to the consumers of USA, whether it be diamonds, gemstones, you know, gold and diamond jewelry. And because of the reason of this high tariff, if we look at the data of the last, I would say 6 months, 9 months, the exports have come down by 60% when it comes to cut and polished diamonds. It's come down by 24.5% for the studded diamond jewelry and about 29% for the plain gold jewelry. So you can easily imagine the kind of you know, negative impact this whole higher duties on the Indian gem and jewelry sector by the US was. And now that after 9 months, you know, we are really, really optimistic and positive because from a 5 to 7% duty, it had gone up to 50%. And now with the 18%, you know, overall duty that is being announced, I think it's a big, big relief. You know, the unemployment that got created for the karigars, for the artisans, for the, you know, for creation of jobs was a challenge. Government in the budget also announced the SEZ flexibility of, you know, utilizing the infrastructure and the manpower for domestic only because of such situation. And I must tell you, Shireen, that we as the gem and jewelry sector are very positive that if there is a scope in Annexure 3 of the you know, understanding that is happening, that for loose diamonds or for gemstones, there could be a possibility of 0% duty also, so that we can provide the cut and polished raw materials to the US, and US can do the manufacturing of finished products, anything of that sort. But that will bring a big, big relief to the gem and jewelry sector. And we are very thankful to our Honorable Prime Minister and to President Trump that they are trying to get the two countries together for the benefit of the world.
Well, Suvankar, you're talking about zero duties. President Trump spoke about zero duties as well, but he mentioned that in the context of U.S. goods that would enjoy zero duties coming into India. Rajiv Memani, back to you now. And, you know, we haven't heard from the Indian government on any of those claims being made by President Trump. And many experts also suggest that it would be prudent to take a measured approach and not be celebratory at this point in time, because we have seen Mr. Trump take decisions, roll them back, and so on and so forth. So navigate this, you know, in a more calibrated fashion. Now, in the immediate terms, till we see all of this being realized, operationalized, the T's dotted and so on and so forth crossed, you know, what stance is industry likely to take, and what is it that you want to see in the fine print?
So I would say, you know, at least in what we have seen, there have been lots of discussions between the trade side, the trade groups on both from India, Commerce Ministry in India, and the trade people in the US government. And I have a feeling that there is a good understanding overall to where things stand. India now also has, I would say, I won't say a template, but a good, reasonable way of how do we navigate forward given UK, EFTA, EU in particular. So I feel quite confident, Shireen, that we will be able to navigate through this. There must be almost 90-95% understanding of where things are. I'm sure the last 3-4%, 5% will be done. I think both parties are pretty clear that they have to avoid the red lines, you know, both whether it's for India or for the US. And I'm sure where they have to give concessions also, those concessions will be more quantitative concessions whenever that happens later on. And at the end of it, I think this is more from a tariff standpoint. So I personally don't think, you know, it should take that much of time to get this done. I think at least that industry's view. Second is, you're absolutely right. I don't think there's any point in being euphoric or making loose comments or on this. And third, you know, as I've told earlier, I mean, overall, from an economic standpoint, the impact is not that significant one way or the other. I think it's really so overall industry-wise. I mean, it's good news for the reasons that I had mentioned earlier. But for the industries that are impacted, I think for them, at least when they are negotiating their next level of contracts when they're talking to their vendor, to their customers, long-term contracts when they're looking at. Earlier, I think somewhere in December, a lot of these contracts get negotiated in December, January, depending on the sector that you're in. And sometimes in some of these cases, I think people were kind of giving up. I think at least here, people will say, okay, let's bite the bullet for some time and let's see, you know, if we get the new set of deals done in the next month or so, if this thing gets announced.
No, you're absolutely right on that. Amit, I'll give you the final word. You know, how much does this move the needle as far as your company, for instance, is concerned, given the fact that this overhang now seems to be behind us, even as we wait for the final details?
So, Shireen, what this does is it gives a lot of clarity and transparency to our customers in terms of, you know, where we stand as a country on tariffs, and give us, you know, more visibility and the ability to better negotiate with our customers on a longer term basis. So it changes the perspective from a short to medium term to a longer term. And I think that's the big difference. And it allows us to, you know, modify our strategies or do whatever it takes to build a longer term, bigger engagement with our customers. So that's really, it removes the overhang of uncertainty.
Yeah. It removes the overhang of uncertainty. And to borrow from Amit Kalyani, pun intended, it's been 9 months of labor, but we're finally through, and we do have at least a reciprocal tariff framework in place, if not a bilateral trade agreement, with the fine print yet to be vetted. But we will, of course, keep you posted on that right here on CNBC-TV18. It's been an all-nighter for us. We wrapped up at 2 in the morning and we started again at 6. But gentlemen, appreciate you joining us here on CNBC-TV18 to take us through industry's first reactions to what has been a significant development, a positive development, a big overhang that has now been removed. Rajiv Mamani, Amit Kalyani, Sanjay Budhia and Subankar Sen, thanks very much for joining us. We'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a moment with more.